Hello friends, this is Raj Sastri from Raj Option Trading. Today is January 22nd, 2023. Hope you're all doing well. In today's segment, we'll take a look at top healthcare stocks to buy and take advantage of the pullback. So with that, let's jump in and get started. Look, I already filtered this list to look at just the healthcare stocks with the volume more than 500,000 shares traded as of last Friday. So what we can do now is we are trying to look at stocks which are beaten down. So what I would do is I would go into RSI. You could follow this in your own screener, whether it's Finviz, TradingView, or any other screener for that matter. I would say let's look at RSI less than 50, so that way you're looking at stocks which are beaten down. So I would say less than or equal to 50. So we're trying to look for beaten down names here. And look, we got a nice set of stocks here. So we are down to, let's see here, 128 stocks as of now, as you can see right here. And top of the list is United Health, as you can see here. And one more thing we'll do is we want to make sure companies have sales growth. We don't want to chase the stocks with the no sales growth. I would say 5-year sales growth, greater than at least 5%. So that way we look at the growth names here, not the stocks which are not growing at all. So I would say 5% here, just to narrow down the list of names. Look, we are now down to 55 stocks, as you can see right here, and these are the stocks with nice sales growth here. And we could also go in here. We want companies with a net margin positive. I want companies with at least 5% net margin. I would go here and say net margin greater than or equal to 5%. So we want profitable companies generating money. All right, let's jump in here and say 5%. All right, so now let's see here. There you go. So we are down to just 16 stocks here. I think this is good enough to take a look and invest, as we can see here. All right, let's start with UNH here. UNH is one of my favorite stock. It's a great healthcare play here. They're into insurance, as many of you know. You might have United Health Insurance in your company as an example. Look, it's a healthy company, as you can see here. Very nice market cap here, $452 billion market cap. As you can see here, they got a strong buy rating from 19 analysts, as you can see here, and it's got a nice growth rating C from Morningstar. Profitability is C. Finance is rock solid B, as you can see here. Company is doing great, and from a performance perspective, look, stock has been doing great. 2022 up 7%, and when most of the companies are down. 2021, 2020, 2019 all up nicely, as you can see here. So with this, this is a winner. You could look at this company here. One thing I would point out is keep a look at the RSI here. RSI 37 in last 14 days tells you stock is beaten down, and RSI in 7 days is 39. It tells you stock is getting some traction here. Stock is trying to make a move. The moment you see RSI 14-day 37, RSI 7-day 39, that tells you stock is improving, is trying to go higher. Look at the ATR, which is average true range 11.36. That tells you stock is volatile from a price movement perspective. Low IB rank, it's good for folks who want to buy long-term call options and sock it away. And open interest is not too high. This is not one of those stocks where options traders trade a lot. This options perspective, open interest is pretty low, as you can see here. So with that, let's jump into the chart and look at this company here. From a chart perspective, we'll go to my favorite platform here, which is Thinkorswim. Look, from a chart perspective, I've got here Bollinger Band, as you can see here. The stock is fallen down to the lower band of the Bollinger Band, trying to go higher, as you can see here. So I can see this. Look, it fell down to lower band here and went higher. And this does once in a while fall down to lower band. Every time it falls down to the lower band, it's always a buying opportunity. This time is no different. And look, from an on the balance volume perspective, it's going higher. That's great. RSI, after getting clobbered here, its stock is trying to, RSI is trying to go higher. That's a good sign. And look, from a RSI perspective, from an IV rank perspective, current IV rank is 5, as you can see here. That tells you if you want to buy long-term call option 90 days out, you could buy here. You're not paying too much money. And from a DMI perspective, look, the red line wants to go down and green line wants to go higher. That tells you stock is now trying to get stronger. So with this, I would recommend you to buy UNH. Even if you're a stock buyer, you could buy some UNH in your long-term portfolio. Think about 401k or IRA, or even your long-term portfolio. It's a great fit here. This can help you to weather this market downturn. This will do great. All right, now let's jump in here and look at a few more names. All right, so next is Lilly. Lilly is one of my favorite stock here. Look, Lilly has, from a market cap perspective, $333 billion, as you can see here. And Lilly, look, it's done great. 2022 up 34%, 2021 up 66%, 2020 done great, 31%. It's a great stock. And look, right now from a RSI perspective, it's getting clobbered here. RSI 14 days 37, RSI 7 days 28. That tells you stock is getting weaker. This is when I like to buy slowly and accumulate. And look, from an earning perspective, earnings is around the corner. It's on 2nd of February. So this could be a good opportunity to buy some quality name here. They're trying to do some great things around obesity, as well as things like dementia. I think it's a great company. Probably they have a little bit setback in the dementia or Alzheimer's. I think it's a great one to buy at this time. It's a great stock. And look, from a option perspective, this one is not very active in the options market. If you want to buy option here, look, IV percentile is 20, IV rank is 20. You could buy it in your long-term portfolio. And then you got, let's go into the platform here, Thinkorswim, and look at Lilly. All right, so Lilly, look, from a chart perspective, this one also, look, it's trying to get slightly weaker here. Stock is coming down, as you can see here. On the balance volume is also coming down, and IV rank perspective, IV rank is low. Look, in the DMI chart, the red line is going higher and the green line is coming down. That tells you right now stock is getting weaker. I would wait for say a day or two, slowly start buying. This great company, they always try to go higher from this lower band of Bollinger Band here. It's a great company. I would suggest buying some. Look, the reason it came down is, look, we got the FDA rejection here. FDA rejected Eli Lilly's application for accelerated approval of the new Alzheimer treatment. That's the reason stock came down here, but it's a great company. You could buy this one also in your long-term portfolio. All right, let's jump in here and look at Merck. Look, Merck has been going up like rock solid. Look at the great performance of Merck here. 2022, as you can see here, 49%, done great. But look, for past few years, it's done nothing much, as you can see here. So that's why it's trying to go higher. And it's a great company here. From an RSI perspective, look, this is also getting weaker from 49 to 43. And IV rank is 26, and this one, as you can see here from the options market, this is more active. Look, 607 thousand open interest here. That tells you it's a pretty solid, rock solid in the options market. So you could take a look at this one also. Look, earning is around the corner for this company also. Earning is at February 2nd, as you can see here. So with that, let's jump in and look at the chart here for Merck and go from there. All right, so look, Merck stock has gone up so much here. Probably this one I would not buy at this level here. Stock has gone up so much this year. I would wait for a some more pullback here and then jump into Merck here, mainly because it's gone up so much in 2022. All right, now we got few more here. I would also pay attention to the debt to equity ratio here. Look, we got debt to equity ratio here. Anytime debt to equity ratio is super high, you got to be slightly careful with names like Halo here. I would not jump into names like that here. We could even reduce the list here by looking at debt to equity ratio, but let's keep going here. And then you got AbbVie here. AbbVie is one of my favorite stock here. And look, AbbVie has done great 2022. Look, 24%. This is a steady Eddie type company here. Keep checking along and does pretty well here. And look, for AbbVie, earning is coming up on February 9th, as you can see here. Nice analyst, 15 analysts, they got a buy rating right now, as you can see here. And look, they got nice $11 billion cash and great rating from Morningstar here. Growth perspective, it's B. Profitability is A. Finance is B. Great one here. And I would, as you can see here in the option market, this is not super active, 457K. And from a RSI perspective, look, this stock got clobbered here. RSI 14 days 32, but RSI in 7 days 25. So let's jump into platform here. Look at ABBV here, AbbVie. Look, stock is getting clobbered here. Look, it's come down big time, as you can see here. And look, from an RSI perspective, came down. On the balance volume, on the contrary, is getting stabilized here. So I would think it's a great time to buy some AbbVie. If you don't own AbbVie, I recommend buying some AbbVie at this level here. Look, it's trying to stabilize slowly here. It's a good time to buy some AbbVie up here. And if you go back here, look, AbbVie, look, they got a nice net margin. Look at that net margin, 23%. Great net margin here. And then you got a few more here. Look, Pfizer, it did great back during the COVID days here, but look, 2022 stock gave up 10%. Folks think it's a COVID winner, but now it's kind of losing out, as you can see here. I would probably wait slightly on this one here because stock has gone up so much during the COVID days here. Now it's trying to step back, as you can see here. But look, 11 analysts are following. Nice buy rating, as you can see here. This one is super active in the option market. Look at the option open interest here, 1.7 million shares here. Option volume is also pretty healthy. And look, from a IV rank perspective, is 28, pretty low. If you're a long-term type person here, you could buy some stock, or even call option. Earning is coming up around the corner, 131, January 31st. And if you go here to AbbVie here, sorry, Pfizer, and look, from a chart perspective, stock is getting clobbered here. At this time, I think probably it's a good time to slowly buy. Folks are a little bit worried about Pfizer here, mainly because Pfizer has gone up nicely, and folks are worried about their their pipeline when it comes to drugs besides COVID-19 drugs. That's why it's coming down right now. But I think at this time, it's a great buy for a long term. All right, so we got a few more here. Intuitive Surgical, as many of you know here, folks are putting off their elective surgeries. That's why this one is slightly down. Look, 26 here, down 26%, as you can see here. And this one has got nice net margin here. Look at the net margin, 23%. And look, it's done great in 2020 and 2021, 2019. Stocks like this one, it's a great long-term play here, but medical devices, you got to be slightly careful. They got rocky roads, as many of you know here. And same is the story with Regeneron here. Look, Regeneron, it's got negative 1 year sales growth here, and quarter-over-quarter sales growth is also negative. But stock is trying to improve, as you can see here. 2022 14% higher. You got to be slightly careful with region run here, a little bit rocky road here, and look from a RSI perspective, it's getting stronger. So because it's a great long-term play here, you could slowly buy some region run here, and go from there. And from an options perspective, look, open interest is very low. Don't try to buy call option. It's not worth the while. Very low options open interest. So I would not recommend buying options here. And then you got Dexcom here. Dexcom is a great one here. Continuous glucose monitor, as many of you know here. It's a great stock, but look what's going on here. 2022 stock came down 16%, but overall nice performance in 2021 all the way to 2019. Overall great player here. And look at the nice, it's okay net margin 8%. I think it's a good one here. You could buy some Dexcom here, $107 as you can see here. And as you go here to Thinkorswim here, we can say DXCM here. And look, this one is trying to use the lower Bollinger Band as a support level and trying to go higher. At this time, I see on the balance volume is trying to go higher, and RSI is also trying to go higher, as you can see here. And you could wait for a day or two and then buy some. It's a great one to buy. Dexcom is an overall long-term winner with all these diabetes type situations are disturbing a lot of people. All right, let's look at a few more here. We got a few more as you can see here, and keep watching the options open interest. Also, the things that you see high open interest are the good one for the options players here. All right, now we got a few more here. I like stocks like Veeva System. It's a good one here. Look, it's beaten down in the last 2022 as well as 2021, down as you can see here. Look at the net margin, solid net margin here. You could buy this one also here. And then we got GMAB. We did not talk about GMAB, GenMab here. GenMab, as you can see here, it is a good one here. It's a Denmark company based in Denmark, as many of you know. And look at the net margin here, nice 47%. And stock has done pretty okay in 2022, not great, but you could sock it away in your long-term portfolio here. And we've got one of my favorite stock, in the diagnostic world here, Quest Diagnostics. And look, this stock is down here during the COVID days. This used to fly high, but now it's down 8%, as you can see here. And as you scan through here, look, net margin is 12%, not too bad. You could buy this one also here. Look at that RSI. Stock is getting clobbered here big time, so this could be a good time. I've been watching this company. Whenever it comes down like this, it's always a good time to buy. So let's jump in here and say DGX, Quest Diagnostics here. All right, look, stock is down big time here, and now slowly on the balance volume is picking up. That's a great sign. And look, RSI is completely clobbered here. This is a great time to buy some DGX and go from there. Great time to buy some DGX here. IV rank perspective, very low IV rank, but look, it may not be worth your while because look, option volume is option open interest is not much here, just 17K. I would not recommend buying any options on this company at this time here. And we got a few more here. We got stocks like tech. It's net margin 26%. And look at the RSI, it's slightly getting weaker here. Earnings is coming up around the corner, and it's down 36% in 2022, and this could turn the corner in 2023. You could buy this also. Look at that rock solid finance here, grade A from Morningstar. Growth is grade B. You could buy this great solid company here. You'll do well. And we got a few more here. We got Halo, AMN, and so on and so forth here. You could take a look at these. but I would recommend the companies I talked about here. And if you want to look at these companies, as usual, keep watching the net margin here. You want to make sure you're going after nice net margin companies. Like Halo is a good one here, 36% net margin. You could look at IRWD, look at the nice net margin here. You could look at such companies and buy some, especially because these are beaten down healthcare stocks. So with that, thank you very much. Happy investing and trading. Please subscribe.